Hey, this is Doug Fields, CEO of the Institute for Healthcare Consumerism, along with my co-host, Brent Macy, Managing Director. And welcome back to Healthcare Consumerism Radio. And joining us in this segment is one of our affiliate members, GoHealth. And to lead the discussion for GoHealth is Scott Sullivan, Senior VP of Sales and Business Development. Good morning, Scott.
Good morning, Doug. Brent, how you guys doing?
We're doing great. How's Chicago today?
It's cold and rainy, so pretty typical weather for us these days, I tell you.
Oh, just beautiful, huh?
Yes.
I know, right?
Yeah, good to have you on the program. Look forward to seeing you soon out in Las Vegas. Give our audience a little background on GoHealth, and then we'll jump into this COBRA alternative discussion.
Sounds like a plan. Thanks for having me, guys. We really appreciate it and are excited to see you in Nevada here in a couple of weeks. So GoHealth, we're a Chicago-based company that really leverages technology to make the buying and selling of health insurance simple. So we have 3 separate business units within the organization. The first being an agent business unit, and we power roughly 30,000 agents across the country through our quoting enrollment platform as well as our CRM tools. The second business unit we have is we actually power carriers, both from an outsourced direct sales perspective along with technology. And then lastly, we have our own agency. So GoHealth is one of the largest agencies in the country. We actually sold more subsidized health insurance policies than any other private organization last year during open enrollment.
Oh, well, that's great. Hey, so the ACA has provided some relief to laid-off workers and giving them some choices around COBRA. Talk a little bit about that, if you would, Scott.
Yeah, absolutely. I think that really kind of going down to the mechanics of it is that if a employee is unfortunately loses their employer-sponsored coverage, that actually would be known as a qualifying life event. And for all intents and purposes, a qualifying life event really just empowers a consumer or an employee with the ability to purchase a subsidized health insurance policy outside of the open enrollment period. So to give you an example, the open enrollment period for this year starts on 11/15. And then ends on February 15th of next year. So if you don't have a qualifying life event, you really don't have access or the ability to purchase a subsidized health insurance policy. Mm-hmm. What makes the losing the employer-sponsored coverage unique in regards to as far as the qualifying life events go is that unfortunately, oftentimes when you lose your employer coverage, that may be a byproduct of losing your job, yep. Which obviously is a very difficult thing for anybody to kind of go through. So the ability to leverage this qualifying life event to purchase a subsidized health insurance policy has been a very rewarding thing based on our numbers and our experience.
Yeah.
So to give you a couple of examples and give you some numbers, last year a individual who purchased a subsidized health insurance policy was only paying roughly $69 per month after the subsidy. So it's definitely dramatically more inexpensive than their alternative, which would be the COBRA in this instance.
Yeah,
and another note that we look at is the fact that buying a qualified health insurance policy on average will be 40% less than the premiums by COBRA. So really this the unfortunate event of losing your employer-sponsored coverage enables the consumer to take a look at the options that are available to them and obviously save money in a positive light.
Yeah, because COBRA is, to your point, it's always been a very high-cost option for those put in that unfortunate position.
It is, and I think that one of the things we're realizing is most people just don't really realize this is available to them. Mm-hmm. So, we've kind of taken it along with our partners as an opportunity to educate these folks because it really is one of those true instances of a win-win, both from an employee perspective as well as from an employer perspective.
Now, talk a little bit about so employer obviously isn't going to pay for that health insurance, but you allude to the fact that they can actually make commission by referring people to, the GoHealth exchange.
Well, you got it. So we've got a variety of different partnerships that we've set up, and oftentimes it may be through a broker or a Ben admin platform, for example, to get us engaged with those employers. But we have one example would be we've got a relationship with a broker that referred us over to a large retailer, and they had an opportunity where they had a lot of individuals that were electing for COBRA. And so we set up what we call a private exchange for this particular opportunity. So a co-branded website and portal along with a dedicated 800 number. And we worked in collaboration with the employer as well as the benefits partner on educating the employees that this was available for them. And then the employees would call us up. We would appropriately put them into the right plan. And then we all would share on the upside. We'd share on that commission. So it's a great way to kind of turn oftentimes a negative into a positive, and we can create additional revenue stream either for a broker, a Ben admin platform, or often even the employee as well.
That's
employer as well.
Scott, I think most people wouldn't know this about GoHealth and help pull this together. I mean, you can come into an employer and you can be their complete solution, you and the partner, or you can come in and actually you can partner with others in providing accessibility to the federal facilitated marketplace, providing accessibility to individual insurance alternatives, correct?
You got it. We were actually the first web-based entity to successfully integrate with Healthcaregov. We did that on the 28th of November last year. And as I mentioned earlier, we enrolled more subsidized applications than any other kind of private agency out there. So without question, it probably is more common for us to work with a partner than go employer direct, because I think we bring a unique skill set to the table. And from an employer's perspective, they really just want to make sure their employees have the best options available to them.
Sure.
Because as we all know, their options are going to differ by state. And for us, we've got such a strong depth and such a strong network that we can assist a consumer in California just as easily as we can in Illinois or Arizona or Texas, for example.
Now Scott, does GoHealth also serve the non-active employee, the retiree employee base for employers?
You got it. That's a great point, Doug. I think those are probably the three most common ways we interact with the employer would be the COBRA alternative, an early retiree, and then the non-benefit eligible. So, I think every employer out there wants to try to provide some sort of option out to their employees, even if they can't afford the group health options. And what our system and what our people can do is we can take our technology, integrate it with an existing platform that may be out there, and then just as importantly, we've got a licensed agent on that back end to educate that employee, give them the various options, and then even take that application over the phone. So we can really kind of mix and match our offering to whatever be the most appropriate partner or employer.
Scott, let's move on to another topic that I think is of interest to a lot, but maybe misunderstood. Talk to us a little bit about defined contribution and your interpretation of that and where you see that being adopted in the marketplace.
Sure. No, I think that's often it's another really hot topic. I feel like the term defined contribution exchange are more used now than ever have been before. But really what some of the numbers we see is nearly half of all U.S. employers are moving or have moved to a defined contribution model. And even I'd say the other half are at least thinking about it. Because really what the defined contribution is set up to do is give some relief to the employer in regards to being able to cap their medical expenses and their insurance expenses. Because obviously, as we know, as premiums increase, it's difficult oftentimes for specifically a small employer to kind of keep up with that. So a defined contribution platform enables an employer to give a contribution to employees, but have it be a set contribution. So and then the consumer can leverage our marketplace, make their appropriate selection of their individual health insurance policy along with an ancillary policy if it makes sense. But in its simplest form, it's just the employers' ability to kind of make the switch to give their employees more coverage options based on their budgets and their needs.
Yeah, defined contribution is not new, but what's new is the marrying with technology and platform solutions like yourself. Correct?
You got it. Because I think the big thing is now is individual health insurance is guaranteed issue. So that's been a big change for us. So oftentimes, again, specifically small employers, we're hanging on those group plans because they really felt an obligation or a desire to give these health insurance options. So now that everyone can have it, regardless of pre-existing conditions or what have you, this has become a much more relevant discussion or opportunity for these employers.
Scott, this is Brent. Talking specifically to the exchange platform that you guys have, when you go in and you talk with, let's say, an employer, what do you think that employer needs to really understand and evaluate first and foremost when they're looking at a solution like yours?
I think that a broad, basically having a solution that can kind of give the employee every relevant option. So if you kind of look at our platform, we have both on-exchange options, we have off-exchange options, we have ancillary options. Versus if you look at some other platforms out there, they may be siloed in one category or the other. And I think an employer, based on our dialogue, their responsibility is to try to make sure they can give the best choice to their employees, regardless of kind of their makeup, where they're located, their income bracket, what have you. So I think, empowering your employees with the ability to kind of make a selection of all the relevant options that are out there is probably priority number one.
With and along those same lines, Scott, when we've heard, in our conversations that these exchanges can take many different forms, from even getting way past the medical side of everything and moving into other types of products. Do you see that evolution taking place down the road? And if so, how many years do you think that these things will grow, these exchange platforms that'll grow to get, almost like the Costco model that you kind of hear out there, where it's got a lot of different products built into the platform?
Sure. No, I think that if you look at it right now, obviously medical is the main items that we focus on, but we're seeing a very high amount of individuals that are selecting to add dental, to add vision. We're educating consumers every day about accident protection or critical illness protection, things like that. So I definitely look at it as being the exchange model to grow with more products to become available, because oftentimes these ancillary products can provide a great value to these employers or these consumers, because they can assist in where there may be gaps in the benefits that the traditional policy may provide. So we look at it as being definitely an area of growth and something that we're going to continue to kind of keep our eye on to make sure that our portfolio of offering, be it medical plus ancillary or just medical, has got everything a consumer would need.
Now talking to your channels, from a sales standpoint, is your model, is it broker-centric? Is it friendly to the brokers, where a broker can come on and recommend your platform to move their employer clients onto your platform? Do you embrace the brokers out there?
Of course, yeah, absolutely. I think that we're unique in that fashion. If you look at other folks in our space, they either kind of go one direction or the other. They build this technology and they utilize it for their own capacity. Whereas what we do is we can go to these employers and say, hey, listen, we want to help you, kind of capitalize on this individual opportunity in the manner that you think that's most appropriate. We can provide you with the technology and the tools, and you can really just, for lack of better words, lease it. Where you could just utilize it as a way to drive more efficient production. And that's something that we see. That's those 30,000 agents across the country that do that on a daily basis with us. Or we can go to the employer and say, hey, listen, you don't want to deviate too much from your core, but you do recognize that this is an opportunity on the COBRA alternative side, the non-benefit eligible or the early retiree side. So why don't you just refer that business over to us, and we can kind of share in the revenue for that and set up kind of a long-lasting partnership. So we really, I think, do a good job of going to these brokers and say, listen, if you want to get fully inundated with the individual health insurance options, here's the technology. Or if you just want to focus on your core but set up an additional revenue stream and refer the business over to us, we can do that as well.
Hey, Scott, I think this fall is a very important time. So kind of give us kind of your perspective, you and your team's perspective on what you see happening this fall that will potentially springboard us into next year. And we got about a minute and a half to go. So.
Sure. No, I think that, with more stability out there, this year, compared to last, we're looking for a very productive open enrollment period. I think a lot of consumers, even with some of the instability last year, you guys would, it's really exciting to kind of take a look at someone who's never bought health insurance for the first time. It's really kind of a rewarding type of a scenario. Yeah. So, we still look at it as a scenario where the technology is going to be kind of key, but you definitely better make sure you've got someone in that back end, that licensed advisor, that licensed broker, to be able to really fully educate a consumer on what their options are. Because many of these folks are buying health insurance for the first time. So it's really a kind of a combination of the technology to help, educate consumers on what's available for them, and then that broker to kind of help guide them across the finish line so they really truly feel like they made the right selection for themselves and their family.
Yeah, that's great. Hey, Scott, really enjoyed having you on the program today. I really appreciate you taking the time out of your day. You have a great weekend up in Chicago. And to our audience, you can join Scott and the rest of the GoHealth team out at IHC Forum West in Las Vegas, November 11th through 12th.
Thank you, Brent and Doug. I really appreciate the opportunity. You guys have a great weekend as well.
Thanks, Scott. Stay tuned for the next segment, Healthcare Consumerism Radio.